Let's go to US Treasury markets. Treasury markets includes discount bonds, Treasury bills, duration less 1 year, and coupon bonds, medium-term notes for 10 years and long-term bonds to 30 years. The crucial yield is the yield of 10 notes. Why? Short-term bonds are closed on the key rate. Its yield depends on the change of the key rates. Long-term bonds belong to institutional investors, pension funds. There is a theory of segmentation of yield curve. In accordance to the theory, the yield of long-term bonds is related to the behavior of institutional investors. So only the yield of 10 Treasury is the market. It reflects market expectation. It's no confidence that one part of quantity easing was called twist. Do you remember this dance? The main goal of this stage of quantity easing was to decrease the yield of Treasury notes exactly. It's important that investors prefer short-term bonds in period of crisis. For example, in 2008, the yield of Treasury bills was negative. Bonds were traded above the face value. Why? At this moment, investors were afraid and sold bonds, stocks, and commodities. They wanted cash. Treasury bills are the cash equivalent. Strangely, that last year, Treasury issued Treasury bills mainly, although there was no crisis. Further, I would like to speak about index bonds, TIPS, Treasury Inflation Protection Security. It's interesting that there are two technologies of indexation. British index-linked bonds assumes that a coupon is indexed by an inflation. TIPS assume that the coupon rate remains unchangeable, but the face value changes because of inflation. What do you think? Which type of indexation is more profitable for investors? TIPS, of course, because in this case, bonds save the history of inflation. Who buys this security mainly? Of course, pension fund. There are the same securities and on the Russian market. The next type, Treasury bonds, are STRIPS, separate trading interest and principal securities. These securities assume a separate trading of coupon and face value. For example, you have 3-year coupon bonds with coupon payments once a year. In this case, the issue issues 4 securities, 3 for coupon and 1 for face value. So we transform 1 coupon paper into 4 discount bonds. Who likes these bonds? Pension funds and commercial bank. They may have strong liability on defined data in the future. Buying such bonds, investor hedges its liability. He will be sure in future cash flow. And finally, let's talk about saving certificates. These papers are oriented to retail investors. And I will show further that the share of household on bond market is not larger, but there is a special bond only for retail investors. And what I can say about bid-ask of Treasury bonds, Treasury bills. You remembered that return of any instrument is calculated very simple. The return for Treasury bond equal face minus market price we must divide it by our cost, market price, and then this figure must be brought to year return. This yield is called equivalent yield, but in the US Treasury bills market, discount yield is used. You can see that the calculating initial profit is divided on the face value, and bid and ask of these bonds are given in terms of discount yield. It's interesting to pay attention how to calculate prices of treasury coupon bonds. In Russian market, we give, for example, bid and ask, so 19.5% versus 19.6%. But in American market, we have different calculations. 1% divide into 32 parts, and we can see bid ask, for example, 101 and 1/4, and 101 and 732. This is unusual. At last, about the structure of investors. We've seen that this indicator is crucial to the market. Shares of retail and institutional investors, domestic and foreign investors, influence the size, duration, and stability of any bond market. What can I tell about the structure of investor of treasury markets? Main bondholders are monetary authority, Federal Reserve System, and foreign investors, followed by mutual and pension funds, insurance company. In the end of the list, we can see commercial bank and households. But why the last category doesn't like government bonds? The answer is simple. Banks and households like big profit. So the treasury bond market is not interesting for them. I would like to remind you that the share of foreign investors on treasury bond market is continuing to decline. And in this picture, you can see the last structure of investor of treasury market. What is interesting? We see increased share of retail investors, and as for country structure, leading bondholders are the same: Japan, China, and the United Kingdom. And now you can see long-term dynamics of 10 treasury. It's interesting that in last article in Wall Street Journal, authors paid attention to the unusual movement of the dynamics of treasuries. We've spoken about future expectation of the decrease of the key rate. In this circumstance, the yield of treasury must fall, but it will increase. Why? Maybe holders of smart money know something. And now we cannot find real alternative to treasury market. But problem of the large public debt sooner or later will generate problems. For example, last year, many American banks faced problem of the depreciation of the portfolio of government bonds by the increase of yield. We can see this at case of Silvergate Capital Bank.